Hey, what's up guys? What you're about to see is a review of a backtest session done by one of the students inside Bootcamp, which is the flagship program here at AOC, where I basically work with you one-on-one to get you from zero to funded or full-time trading within 45 to 60 days. Now, this ties into one of my biggest beliefs when it comes to trading and one of the main reasons why I created Bootcamp in the first place. I believe that the number one reason that holds most people from achieving the success that they want from trading is not that, they're stupid or they don't have the right strategy. It's not even about the technicals. It's definitely not about the psychology even. Number one thing that holds most people back and people do not even know, or they're not even aware of this, is the lack of a quality feedback loop. Now, I like to say that the only thing worse than making a mistake and thinking that you're doing the right thing is doing the right thing, but then thinking that you made a mistake. Let me paint a picture of how that looks like. So let's say that you take a trade and you do everything wrong in the book, right? It was an emotional trade. You were just taking a random trade. The market conditions were not lining up. You were going against the higher time frame trend, whatever. But then the trade ends up being a win and you think you did something right. And that's a concept known as resulting. This comes from poker, where, you can play a really bad hand, and if you win, somehow you think that, it was a result of your skill, right? But this is rarely the case when it comes to trading. Trading is a game where people are ultimately rewarded for putting in high quality inputs or making the right decisions every time over, the course of the long term. It's rarely about, one big win here and there, because once you start getting into the habit of doing the wrong things, guess what's going to happen? You are going to lose, and overall, you are going to be net in a loss. And similarly, one of the worst things that can happen to you is, let's say you do everything right in the book, right? You were patient, you waited for the trade to come up, you traded in line with the higher time frame bias, you weren't counter trend trading, you waited for all of your triggers to come into place. And once you execute that trade and you lose, and you think that, it was a result of you making a mistake, and so you stop doing those good habits, that's probably even worse. Because here's the thing that you need to know about trading. This is a game of probabilities. Even if you do everything right, you can still lose. And even if you do everything wrong, you can still win, much like poker, much like any game of chance. Brings me on to why I created Bootcamp in the first place. I realized over time that the only way I was going to be able to help people is if I am there personally, one-on-one, literally looking at you do a 40-minute backtest, and then I'm going to give you a live commentary then and there. There has been so many instances in, reviewing these backtest sessions. Currently we're, in intake 3 of Bootcamp. So it's been 3 months since we started this. And in the 20 or so backtest sessions that I've, reviewed so far, a very common thing that comes up is that, they're doing the right thing, but then it ends up in a loss and they think it was a lack of skill, right? And that's where I come in on the spot itself to, fix the problem. Hey man, you actually did everything right. This was just a game of chance, right? I want you to keep up the good habits and just keep going because you're on the right track here. And so far, based on the results speak for themselves. This has been invaluable. 2 out of 3 people in the first intake have already gotten funded and are now full-time trading. The other one has been busy with work, so he's been a little bit slower on the progress. And in the second intake, we already have all 3 members at a level where they're now live trading and halfway to passing their funding challenge. And right now with the third intake, well, we just started that. What you're about to see is going to be a lot of value, but what I would also like you to consider is that if you are stuck in trading right now, you know that you are capable of so much more. You know trading is capable of giving you the life that you want, but somehow, some way, for whatever reason, but you're not getting the results that you know you're capable of. I want you to consider clicking the first link in the description box below and booking a call with us to see if, we can potentially work together. I only take 3 people per intake, hence why this is a one-on-one basis. This is not going to be like anything else that you've ever experienced. Now, I could bombard you with a bunch of testimonials or whatever, but I'm going to leave that up to you. In fact, watch this video and I'm sure you're going to realize the value of what we're offering here. If you're interested, feel free to check out the website. If you are not, perfectly fine. If you do like this though, and if you would like to see me post more of these, backtest review sessions, do let me know in the comment section below. But otherwise, enjoy the video.
Recording. So I'm just gonna start with we're just gonna put quick on there. So monthly for now, it would be bearish bias because of this long bearish candle. So yeah, my monthly bias is bearish. Yeah, even though the whole trend is still uptrend, but I would for the whole trend the bias is monthly.
So real quick, I don't think you can just look at, well, you can look at just the last candle, but that is probably not the smartest thing to do. I mean, not to say not the smartest, but there's a better way of doing it, and it just involves thinking about a couple of other factors. Perhaps you might have mentioned it in the first backtest or like the 5-minute recording that you made, but just purely based off of here, from what I can see, there is currently the monthly is in kind of a bullish fair value gap right now, and from here, that's your external liquidity, and this could be IRL. And so perhaps, this month might head towards the upside, something good to consider. Now, nothing wrong with just using the candles straight up. Just, I would have loved to see you mention, this thing as well. And so the fact that perhaps there is a fair value gap here, but like mainly you swept the liquidity over there. So just considering other factors rather than just, looking at the candle and jumping straight into it, which is nothing wrong. But in terms of thought process, this might be more helpful. And yeah, just something I would love to see you do.
Monthly for now, it would be bearish bias because of this long bearish candle. So yeah, my monthly bias is bearish. Yeah, even though the whole trend is still uptrend, but I would for this near term I would want to look for shorts, and also because weekly also is showing weak signs. This previous weekly candle didn't close above this bearish candle. So and
Now, even though it didn't close above it,
I marked out the previous weekly high, previous weekly low, and I go in.
All right, from there, like something else I would love to hear you mention is in terms of the daily, the weekly, you have bearish order flow, where that's your bearish order block. You broke below, you didn't quite retest it, but at the moment you have broke below another bearish order block, and right now you're retesting it. Something else I would love to hear you mention. And also, last week's candle was technically bullish, so perhaps this week is also bullish. And again, just going back to what we were talking about before, that is internal range liquidity, potentially external range liquidity. But I think you have your bias set. But again, this is just something that I would add and perhaps consider on the side, so that your thought process is not as one-dimensional.
It's bearish candle. So and I also marked out the previous weekly high, previous weekly low, and I go into the daily to see if there's any to find my daily bias. So there is a fair value gap here, which also how do you say coincides, which also matches here, matches here and also here. So it's probably a pretty strong fair value gap here. That price kept going in and out of it, and we can.
So just to correct the understanding here, once the fair value gap has been filled, it is no longer, valid, or like you wouldn't treat it as a fair value gap anymore. The main thing that's happening here is probably just a range / price got rejected off of this bearish order block, came down, and now it's starting to go up. Potentially this is going to be your drawn liquidity. So yeah, like the fair value gap would have been invalidated at this point right here when you get that bullish candle. The moment you closed above it, that's when it gets invalidated.
And also clearly see a strong bearish order flow in the daily chart, even though before here there is a strong uptrend. But yeah, for the near term, it is a bearish order flow. And yes, this is the daily PD area that I found. So what I would essentially want to see is if price can go up and then back in here and then.
So in terms of this, the better, or rather the correct PD array to use would be this fair value gap right here, which price, actually came to fill, like around here. That's your fair value gap. You will see it. Either that or this bullish order block right here, which I think you have marked out. But yeah, like again, same thing here. The moment this candle closed above, that fair value gap is no longer valid. And so two ways you play this actually. One is, the fair value gap right here. But the second would be if price breaks above this down close candle here, it will turn it into a valid bullish order block. And most importantly, you target, that's a clear target.
And to go up if it wants to do a reversal. And of course, if it doesn't, then you will just continue to move downwards from here and respecting this theory.
Yeah, just real quick, like going from, like for example, on the monthly you said you were bearish. Actually, I'm going to keep going forward first.
And afterwards, I would like to go to the 4-hourly chart. So here I also found a fair value gap here, which also matches with here.
There is also a fair value gap over there, right there if you see it. That's also a valid fair value gap, which price has just filled.
And also being touched by this previous swing high. Yeah, so 4-hourly theory. Yeah. So I actually want to see how price. Oh yeah, my daily bias. Yeah, my daily bias is actually bearish because the previous daily candle is bearish. So so this one is Monday candle. So I would my PCs would be bearish. Yeah, so higher time frame bearish and then daily bearish. So I would essentially want to look for shorts. Yeah. So for now there is a CSD here in the 4-hourly and there is a bullish order flow, but big picture wise I still want to see I'm still seeing bearish. So I just want to look for shorts. So I just want to see how price will play out for now. Okay, just want to see how price will play out. Okay, wow. Okay, wow, it's insane. Okay.
Yep. So that was the part that I think you might have gotten confused over. Yeah. Like, I think hopefully you see what I was trying to get at just now. There was an internal range liquidity into external range liquidity. That would have been where my bias was pointing towards. Also because of the fact that you are so close to this previous swing high here on the 4-hourly, led me to believe that, you are going to reach for it at some point instead of going, like, you will take it out before you go down. Let's just put it that way. Also, order flow and market structure on the 4-hourly was pointing towards the bullish side. And well, I wouldn't have expected it to hit, that quick, but point remains, right? That was kind of, that's what I saw.
So this is still on Monday. We are still on Monday.
I think it will be pretty obvious because, like, kind of mentioned it from the start of the video.
Okay, let's see. Okay, since it already happened, such thing, I think I'll just avoid it for now. Yeah.
So instead of like that can be a mindset thing that gets in the way in the future. If it has already played out in the opposite direction, you don't like ignore it. It's like before you start ignoring it, like let's do it this way. Sorry, let me explain it this way. The point when which you ignore something is when there is no longer something valid for you to trade, basically. And in this case, before you do that, before you come to that conclusion, just read the market for like, hey, could your initial thesis have been wrong? And like, what are some conditions that needed to be present in order for your thesis to be wrong? Something to consider, right? Because right now the market is showing a really bullish reaction. First instinct is that, hey, were you wrong? And if you were, how can you, adapt? Or scenario B is that you might have been wrong on the micro, exact entry kind of situation, but perhaps you may be correct on the macro side. And then you just have to determine like, okay, is there another opportunity for you to get into a short following your monthly/weekly buys? Okay.
In the Monday, and also because it's Monday, so it's better to not trade on Monday. So yeah.
When it comes to swing trading, you can trade on Monday as long as everything lines up, as long as there is a news week. So for example, in this week, you have 2 news events right there, the red news. As long as you have news during the week, you can actually take a trade Monday or like any day pretty much, as long as the conditions line up. The only thing that, one of the main reasons why we do not recommend Monday trading for our model, which is intraday, which means we're opening and closing the trade basically within the same day, is because Monday tends to be a little less volatile most of the time. And if we want to open and close our trade within the same day, ideally we want some volatile conditions and not be holding a trade like that's doing absolutely nothing.
Okay, now we're entering Tuesday. Okay, we go. So I go back to the I'll go back to the daily chart. Okay, daily. So as you can see, this bullish PDRA has been this feather gap has been tapped in and shot up. Yeah, I'll just click which 41, and then there is a strong feather gap here.
So just to make sure, again, the feather gap is validated here. You should really just start drawing it from here, like between this green candle and this red candle. In between there, that's the feather gap. It got filled once. It got filled the second time before that reaction,
which also a high tapped into it. Yeah. So for now, I would take this feather gap as a PDRA for it to for now, daily bias wise, it would obviously be bullish already. Yeah, very bullish. So again, I would just want to wait for daily bias is bullish, and then there's a 4-hourly one here. Let's see, 4-hourly one. Okay, 4-hourly. This one's the daily one. So as of what I understood, is that if there's a very fast extension, price tends to not come back down as low to like this PDRA. Also, I would just take it's better to take the nearest PDRA, and then also
just to give you further clarification on that, it has to do with the equilibrium. Equilibrium means 0.5. So what you do whenever you see like a really aggressive daily candle, if you are expecting continuation for the next candle or the next day or the next week or whatever, depends on whatever time frame you are at in terms of the daily, let's assume for a moment that this candle right here is a daily candle, okay? So what you do is you draw a fib from the wick low to the wick high and find the 0.5 of the candle. So if price is going to continue the aggressive move, you want to look for PDRAs above the 0.5. Because a lot of the times, like following traditional TA, we want to draw like premium discount and we only want to buy in discount and we only want to sell in premium. But the reality is that we don't always get that opportunity, especially when the market is trending really, really hard. When it is, you would want to look for the price to respect this 0.5. Basically, you don't want to see it dip too far below. Because what that tells you is that the market participants that are active moving the markets right now are so interested in buying into whatever asset this is at such a high price that it's going to keep the price, moving. And if it goes underneath the 0.5, like you can still have a valid setup. It's just in this case, compared to the example that I mentioned before, it will be a little bit weaker and there's a bit more weakness. Let's just put it that way. So hope this makes sense. If you have any questions about this, feel free to ask.
Yeah, so daily bias is bullish already. So I would, So now for hourly, I would want to see price to tap into this feather gap first. Okay, price to tap into it one time, and then.
So at that moment, right there,
I wanted to see like if it taps into it like the second time.
We had a setup there.
We're still on Tuesday. Okay, almost. but it didn't. Okay, let me see. Okay, now we're on Wednesday already. Okay, so now on Wednesday, so the previous.
Yep, so the way that you draw this is again from the, now that you're on the daily chart, low, high, you want to see it respect the 0.5 basically. Yesterday was that type of day, but now you have a proper fair value gap formed because the wick low of this candle and the wick high of this candle now forms this fair value gap. So today, if you were to retrace into the fair value gap, you might have an opportunity.
Oh wait, this one is a Thursday. Oh wait, we're on Thursday.
Don't worry about the days, by the way, as long as it's a news week. Because you're doing swing trading, because you're executing on the 4-hourly chart, as long as it's a news week, that's actually all you need. You don't need a news day or then the days matter if you can refine it, but as long as it's a news week and as long as conditions line up, then you are good to go.
Okay, I just accidentally skipped the right day, but I mean, anyways, the price just sideways. So yeah, maybe I think I could have taken a trade here. Yeah, I think I missed this trade. I could have taken this. Let me see.
Yep, you could have totally taken that, but the opportunity is not yet lost because right here you have a swing low, right here you also have a swing low, which means that these are relatively equal lows right before a daily fair value gap. So if you tap this, you're going to sweep up both of those lows, potentially forming a strong low, and price is going to go up from here. That's what I see.
Wait, yeah, maybe I could have taken a trade here. Let me see. So once price got into this fair value gap, folly, then I tend to like to go into the 1 hourly to check if there's a CSD or anything first before I go into 15. But of course, the standard.
You don't actually have to go all the way down to the 15 because I think you're starting off on the monthly, to the weekly, to the daily, to the 4-hour. Although, if you do execute on the 15, if it works for you, great. But in this case, you might be using a little bit too many timeframes. I might just go from, say, weekly to daily to 4 to 15 rather than, so many different timeframes.
The way is to go from 4 hourly and then straight to 15. So once, if there's a, okay, so the tap was here and then the CSD was here. So I would have entered somewhere here. But I think this one would have entered somewhere here and then put it at the previous low. I think, okay, this one, target 2R, rather than 2R. It's a bit risky though, I guess. But they are equal highs also, so it might get picked up price.
So why do you think it's risky? Is it because there are now relative, is it because, why is it risky if you take a trade like that? At the time, you haven't had this relatively equal low yet. So yeah, why is it risky?
Yeah, I just want to test out this see if I could have actually taken a trade here. Yeah, I'll just put it here first just to test out this thesis. Yeah. So for now I'll just continue with the new day. So of course the new day now, Wednesday closed bearish. So essentially here we want to see bearish bias. But of course it's still not clear yet. It's a very.
So in this case, bearish bias, the fact that you formed the daily fair value gap, the fact that you have relatively equal highs here on the 4-hour, I would be potentially looking for a sweep of the low and then for change in market structure.
So I think I would want to trade this day as well. Oh wait, but it's a news day though. It's a news day. Yeah.
Yeah, it's a news day.
Let's see how price plays out. Yep. Yeah, I could have taken this trade. Yeah. Well, anyways.
That's what I was trying to tell you before actually. If you remember, I kind of mentioned that you had a setup. So the setup in particular was after you filled in this fair value gap right here, on the very next candle, that is a confirmation in bullish order flow. In that case, you would have gotten this bullish order block right here. I'm just telling you this so that you can see it next time. But I don't know if you remember, but at that time, I was like, hey, you might have missed the setup. And that's the setup that I'm talking about. Entry at the start of the order block, stop at the end of the order block. You would have hit 2R, pretty much on this candle right here, potentially even this candle. And obviously, if you hold for longer, then, you have more Rs. But that is the general setup. And just to explain that setup, you have a bullish daily candle, which means the next day your bias is bullish. And the fact that you identified the fair value gap on the 4-hourly chart means that that is the area of interest that you're looking at. The moment that area of interest gets filled, and if you have a confirmation in terms of order flow, that's kind of like the trigger that you need. So for a continuation trade. So if you missed it this time, don't worry. Just pointing it out so that you don't miss it the next time. It proved
to me that actually this was a very nice entry. Yeah. So yeah, I would just say if I were to take it straight, how I would do it. Yeah, to summarize it for you. And then so here, because on that day I drew out, wait, this one is from here. Yeah, so daily bias is bullish, very bullish. So into the 4-hourly, I drew out this fair value gap of the 4-hourly, and then price tapped in here. So I'll just dive straight into the 15-minute to find a CSD. Yeah, so here no CSD, and here CSD. So I would probably place a trade here. Yeah, CSD over this high. Place a trade here. Put my stop loss at the previous low here, around 3%. Yeah, and then target to R. Yeah, and then target to R. Oh wait, price actually didn't touch it. Okay, wait, let's just run a little bit more to see it. Okay, I don't think. Wait, okay, actually, not really close enough though. Close enough.
If you use that that other one should have been the quote unquote textbook setup, and that one would have given you the 2R.
I thought that the price tapped it. Okay, never mind that. Okay, I'll just take this away. I mean, probably would have been a.
Anyways, again, bearish daily bias. Notice what I said, right? Something that you can try to anticipate in the future.
Good 2R trade if it was closer down. I don't know, but yeah. Anyways, if it was just now, I would have been stopped out. Yeah.
So now what you want to see for bullish continuation, and just sort of commentating on this live as we go, so that you can learn to see things the way that I'm seeing it. First of all, order flow is already bullish technically. So this would already technically be an area where you hop onto the 15-minute chart and you look for a bullish change in state of delivery. But if you want just undeniable proof that, hey, you are bullish, then breaking above this series of up-close candles would invalidate this being a bearish order block. In fact, you just don't want to see price closing below. You just don't want to see price closing below these up-close candles. That would mean that, you might just retrace and go down lower because this is also a strong high. So yeah, just see what price does. If it's bullish, if it's indeed bullish, then it will close above 4K pretty easily. Although another thing to consider, it is 4K. This is a psychological number. It does actually play a role in the markets, especially because you literally pumped from 3K, 3.1, no, actually, literally from 3K to 4K in the span of about a week. And like psychological numbers,
So in a sense, luckily I didn't take a trade, but also I could have taken a trade. Yeah, but yeah, you can analyze that for me if I was right about it. Yeah. So now we are at the Thursday. Yeah, still very bearish. Still bearish bias. For hourly, hap into this fabric gap again, swept the low. Oh wait, no. I mean, price is pretty unclear now, so I just want to continue to see.
So at this point, again, what I mentioned was that if you go onto the 15-minute chart at this point right here, that's your trigger. You've marked out the area of interest beforehand. I identified that there were relatively equal lows here. The fact that you also identified that there is a bearish daily bias in an overall uptrend means that you had an opportunity to dive into the 15-minute chart here to look for a trade going long. Obviously, I can only see the 4-hourly. I cannot see the 15-minute because you're only on the 4-hourly. Based on the 4-hourly, in order to confirm 4-hourly, you would need to close above 4K basically. But if you go onto the 15-minute, 100%, I guarantee you there would have been a setup here. And the trigger for this, the thought process for this is that you marked out your area of interest. Once your area of interest gets hit, you go into the 15-minute chart to spot for confirmation.
What is happening? Yeah, what will happen? Yeah, start on Thursday. Okay, I think on Friday. Friday. So okay, again, price didn't actually close above the previous bearish candle. The previous red candle. So again, it would still be a bearish.
In this case, it would be bullish because of all the things that I just said, but also because this is a green candle. And even without what I just said, the thought process here is that you're in overall uptrend, tapping into the fair value gap, meaning retracement. You have just swept out some lows. Let's pretend that I don't know what is happening on the daily, the 4-hourly chart, and let's pretend that I don't know that those relatively equal lows were swept. Overall, you're still in an uptrend. This is internal range liquidity to target external range liquidity, which in this case will be 4K.
Yeah, we clearly have not done it. We'll still be bearish. Yeah, we'll still be bearish.
Good thing, one good thing I want to comment you on is good job going on to the daily chart at the end of every day. I love that you're making this habit. Good job. Just going on to the daily and checking the bias every single day because it really does play a huge role in the direction of the day.
But this is a doji candle though, so but of course, if according to my monthly now, it's actually bullish already. Bullish will feel so super bullish. So I'll just see how price played up for now. Okay, there's a 4-hourly SSD, I guess.
Wait, why is that a SSD? Did you get the candle close? Technically yes. I can't really see it though from the zoom out. By the way, if you have a change in state of delivery and if you are bearish, just saying if you are bearish, then at this point you are actually it's kind of tough to tell where you're at right now, but if you were bearish, then you are already in a bearish order block and you can perhaps start trading this if you were bearish.
Yeah, it's like pretty uncertain place here. Yeah.
Yep, it's fine. Like the fact that you have identified that it's uncertain is good, right? Previously, I mentioned that you needed more confirmation or breaks of certain levels to really confirm direction. And it's okay to be uncertain. The important thing is that you identify points when you are uncertain so that you can wait for more certainty to form. The problem that really fucks up a lot of newer traders is that they fail to identify that they are in a uncertain market condition, or maybe they are just uncertain, but they trade it anyways, trying to rationalize the setup, trying to justify the setup or whatever, and they wonder why they lose. That's not you. I can see it clearly here. But just for whoever's watching this, something bonus.
It might be a what's that called? Demand zone, supply or demand zone. I mean, yeah, you get the idea, because there's like a few doji candles here, so maybe it's because this is like a expansion here, and then doji, and then maybe it might come back down. So for now, this is a little bit down. This because there's like a 40. It's like
this case, yeah, I would definitely consider it. One thing I would do at this point though is draw a fib from this high to this low right here and see if this is the 0.886 touch. If it is, then by technical definition, this is a relatively equal high. You kind of expect price to continue onwards to 4100. If not, then, your thesis would be correct because, you have actually just swept out this previous swing high here. So if you start forming, change in order flow and everything, then yeah, definitely target all these relatively equal lows back here.
It's like pretty uncertain place here. Yeah, it might be a what's that called, demand zone, supply or demand zone, and yeah, you get the idea, like, because there's like a few doji candles here, so maybe it's like, yeah, because this is like a expansion here, and then doji, and then maybe it might come back down. So for now this is a little bit I don't know. For me, I would just see how price plays out first. Yeah, going to the, okay, we're in Saturday, Sunday, so it's best to not trade on the weekends. So I'll just, okay, wait, I'll just let it play out. Wait, Saturday, okay, go to next day open, and then go to next day open again. Okay, Saturday, Sunday, and then yeah, we'll proceed to Monday. Let's proceed to Monday, Sunday, Monday, not that. Okay, now we're on Monday. Okay, okay, wait, let's go to monthly first. Monthly is very bullish.
You don't actually need to check the monthly every week. You actually check the monthly every month, not week. You do check the weekly every week though.
No, of course. Weekly also very bullish. So click this out. Okay, weekly is super bullish also. And then I mark out the previous weekly high and previous weekly low.
So over here, like besides marking out the previous weekly high, I would also mark out that level right there, just because of how close you are to that level at the moment. But good job identifying that you are bullish.
Okay. Yeah, very bullish. Daily bias also bullish as well. So this, all the high time frame and the high and mid time frame is actually aligned, which is bullish. So now, okay, wait, hold on. Okay.
So remember what I said earlier as well, that is the low that tapped into the fair value gap, sweeping out all of those 4-hourly lows. You went on to the 15-minute, you would have definitely gotten an entry. In that case, you would be more than 2 hour up at the moment. But hey, hindsight's 2020, right?
See, there's a huge fair value gap here. Huge fair value gap here. APOA, very huge fair value gap here. And it respected it like twice, I think. This one also like, oh yeah, here's wait, no, I mean. Yeah, something like that. Yeah. Respected, this one kind of respected, yeah, and then price went up. Okay. I will also mark out the previous high. Yeah. Of course, they are like even more high here, but I will just mark out the previous what's that? Previous near term high. Yeah. It might be a potential support here. I mean resistance, sorry, resistance, yeah, or potential resistance here. So for hourly we can see, I think I have to see actually. Yeah. Would have taken this as well. Could be the 4-hourly PDRA or the PDRA. There is actually like a small, I don't know, like, yeah, oh wait, here. A very, very small PDRA here. I'll just put it there first.
So in this case, that would have already been invalidated because, well, it's a bearish PDRA and it already got closed through. So you don't want to consider that anymore.
Or I mean, we can use this whole thing.
This one you can consider though, although in this case, I would definitely narrow it down to just from here to here, because every point at this here, it's already filled.
Also, as the,
and yeah, it is true, like just in terms of the 4-hourly, there is nothing much to see because you need to break above, you need to have a candle close above basically this level here, which it seems to be happening right now, in order to have something to see. But again, that's where the 15-minute chart comes into play. And again, just so you can remember this, it's you mark out your higher time frame points of interest, right? That's what you do on the 4-hourly chart. That's what you do on the daily chart. Once that area gets hit, you go into the 15-minute chart to look for confirmation, right? Changes the delivery, change in order flow, whatever it is. You hop onto the 15-minute chart at that point.
Order block for the 4-hourly because of all this hesitation here, I guess. So I'll just take this whole thing as the order block, like here, 4-hourly order block, and then...
Wait, why is that the order block?
Obviously, 1-hourly there's a...
Wait, why is that the order block? There are only 2 potential order blocks I can see here. One is from this candle to this candle. This could be a bullish order block. If you break above it, this entire thing here is a bullish order block. If you are bearish, then from this point onwards to this point onwards, all of these green candles, if you were to break below, this would become a bearish order block. That's the only 2 that I see at the moment.
Obviously, 1-hourly there's a very strong CSD area, so wait, yeah, very nice bullish order.
In this case, try not to go onto the 1-hourly because it is kind of not within your system. You are trading primarily on weekly, 4-hour, and the 15, right? So in this case, you don't have to worry too much about the 1 hour. You're looking at too many timeframes might just confuse you more than it helps.
Of course, I'm not going to first. I want to see if price goes back down, goes back into the internal. Yeah. Okay, so let's...
Yep, great job identifying that. Although in this case, internal could also be this bullish order block right here. Doesn't have to be a fair value gap. It can also be an order block. Remember, the point areas of interest is a PDRA. A PDRA is either an order block or a fair value gap or a liquidity sweep.
Okay, so price tap back in. 1-hourly, okay, never mind, let's go to 15-minute. Okay, so 15-minute. So price tap back, I would essentially want to find a trade here. Yeah, let's see if it's a...
That's what you're supposed to do, by the way. Like, you identify your area of interest on a 4-hour. Once it gets hit, when price gets into that level, you go onto the 15-minute and you look for an entry.
Newsday? Okay. A lot of Newsday coming. Wait, when is this? Thursday, Friday. Okay. So please.
Again, when you're swing trading, especially from the weekly to the 4 to the 15, all you need to do is to identify a news week. As long as there's news during the week, that's all you need.
Tuesday, okay. 15-minute chart. So all the time frame is aligned. Bullishness. Bullish order flow. Yep. And then now I want to look for a CSD in the 15-minute before I put it. Okay, there is a CSD here. So I would put in a long trade here with a below this.
So if you mark it at that point, because the changes to a delivery actually, like, arguably could have happened there, could have also happened there. Either way, try to set a limit instead because price kind of moved quite far away. You will notice if you move your if you move your entry to this level right here, your risk reward will almost double. If you move it here, then you'll get a 25 to 30% increase in risk to reward. So in this case, because of such a large variance and such a large difference in risk to reward, it can be worth it to just set a limit there.
No. And then
Instead of market entering. Nothing wrong with market entering though, but I would try to do it, before a big fat candle like that one.
who are this order. Yeah, I'll do market. I'll do market in, and then hold up. Yeah, okay, yeah, market in 1%. I'll just keep it at 1%. Yeah, I will keep it at 1% first. Okay, let's see what will play out. Oh no. Oh wait, okay. Oops.
No worries.
Let's just go back to the
Don't worry about it. Let's try to break it down.
daily. Okay, wait, what day is it? Let me see. Okay, it's still Tuesday. It's still Tuesday.
So there's nothing to do with the day itself.
It's still Tuesday. Okay, tap back in.
So what might have happened there, in fact, this is definitely what happened. I also forgot the fact that you had this, I thought this was the bullish feather gap, but in fact, it actually should start after this swing low right here, because that's a liquidity point. Also, you have a relatively equal low right there. So these two lows together means that it's a relatively equal low, which means price will sweep it out before further upside. Okay, that's the first thing. Secondly, I also got confused that this was a valid PD array. This is not. The PD array in this case should actually be, let's take a look here. Is there any feather gaps? The feather gap is actually here, right? So you can see that the top of this candle and the bottom of this candle, there is no overlap. Sorry, there is overlap. So this is not a feather gap. But between the top of this candle right here and the bottom of this candle, you have a feather gap. And that would have been the PD array that we wanted to look for, / these relatively equal lows getting swept out before bullish continuation. That would have been what I wanted to see. So yeah, I think I got confused as well. But yeah, just to hopefully you understand what I just mentioned. If not, feel free to ask.
Like a few times. Tap back in like a few times. And there's actually kind of a change of character here as well. So yeah, okay. Again, I'll still go into the 15 minute. Maybe there's still another chance for entry. Yeah. So let's see if there's another 60 happening. Okay, there is another 60 happening here. There is another 60 happening here actually. Okay, here let's see. Essentially, it's still bullish. Still bullish. I don't know if I should, wait for it to like confirm the bigger picture SSD, which is like taking out this one.
Yeah, technically, you do have SSD right there. It's a valid entry as long as you are bullish. But the problem is again, no, actually there is no problem. Yeah, the SSD would have occurred after the break of this candle. Sorry, using my left hand here. After this, so this down close candle, the moment you close above it, that is your SSD. So it's actually a valid one.
Or I can just.
Only problem is that I see at the moment is pre-draw. So for example, right now you have a liquidity sweep followed by a break in market structure. This is known as a break in base. Once more, you get a sweep of the high. Sorry, you even get a sweep of the high here and then break market structure once again. So that's your double confirmation. And right now you're getting it once more. So it's just a little bit sketchy trading into 3 broken bases in a row towards the bear side. That's one thing I would consider. But if you were bullish, then this would be a valid change to delivery. But personally, I'm seeing that the market is, every time it forms a strong high, which is every time it sweeps out a high and forms a strong high, it's forming a new low. Every time it forms a strong high, it's forming a new low. In this case, again, you sweep out this high right here, and again, you are forming a new low in here. So from what I can see, in terms of the 15 minute, the order flow is pretty bearish. So you are very correct to ask the question, should you wait for a bigger picture change in state of delivery? Personally, I would, because so far it's looking pretty bearish.
Taking out this one. Or I can just, enter it here, because there's like a slight SSD here. Yeah. Let's see. Of course, if following the power of 3, we essentially want to enter somewhere here and then exit somewhere here. Yeah.
That is correct, by the way. Daily chart. Yeah, even I kind of lost the context of the big picture. So on the daily chart, what's interesting is that you have a fairway gap from the top of this candle to the bottom of that candle. You've just tapped into it. So following the power of 3, you want to buy below the daily open, and in this case, you're going underneath the daily open into a bullish PD array. So if you get an expansion here, this would actually be the place to buy.
Might be able to re-entry, I don't know. And we are on a new day, let's see. Before I take it straight, we're still on Tuesday. Yeah.
Okay, just sharing the thought process here so that you have better clarity moving forward.
We're still on Tuesday. Okay, maybe I'll just wait for a clear SSD here, I think. Oh wait, I'm in the 1 hour. Okay, yeah, 3 minutes. Show me a clearer SSD Wednesday. Okay, never mind. I'll go back to daily to check. Little time frame. Okay, actually bearish already. Oh wait, no, hold up.
Yeah, just on this day itself, you might be bearish, but there is still chance. Again, that's a bullish feather gap. You just filled it. Maybe you didn't pump yesterday, but today could be the day that you pump. Now, there's also the flip side to this, right? Because, bullish PD arrays will keep working until it stops. In this case, the fact that you have swept out this high here, if there is a chance that, if there is a place where you expect a bullish PD array to fail, in this case, it might be here. And there's nothing wrong with that. Ultimately, you still look for longs because everything is still pointing towards the long side, but you just want to keep in mind, cautiously, because this liquidity sweep right here and the way that the lower time frame order flow is playing out, you might be leaning bearish. But overall, you wouldn't be totally wrong to look for longs. It's just you want to be a bit cautious. That's the thought process.
flows pretty bearish. So daily bias is bearish, but overall is bullish. So I want to find a long. I essentially want to look for longs. Yeah, monthly still bullish. Monthly still very, very bullish. Weekly also still bullish. So yeah, I want to find long. Essentially want to look for longs more than shorts.
So something else to consider is that once you have, and this is, I remember you mentioned something in a group about how you were getting screwed up by ranges, right? You're really struggling when it comes to ranges. Something that can help immensely is that after highly volatile moves, in this case, you literally move from 3K to 4K in like 3 days. After these types of really volatile moves, it would be reasonable to expect the market to start ranging from that point onwards. And so when it comes to a range, this is sort of like you anticipating a range to form. In this case, the range high was here. You just swept out the range high. That is your range low right there, followed by the fair value gap. And so again, just like in the WhatsApp message that I sent you, the best way to avoid getting screwed up by ranges is to first identify that it's there. So identify and sort of anticipate that you are in a range. The problem that gets most people, like the thing that gets most people is that they are expecting trending conditions when the market is already starting to range and the volatility is dying down. And so you expect continuation from here. Nothing wrong with that. It's just that if you are indeed in a range, then the opportunities are not going to be in the middle here. It's going to be after you sweep out the high, you want to short it all the way down to the low. And after you sweep out the low, you want to go long all the way back up to the high. That is the opportunity when you are in a range. It can be tough to identify it at the start, but again, I'm having a feeling right now. And one of the ways that you can identify if you are going into ranging market conditions is to just look at the volatility. Recent volatility, the market always moves from periods of high volatility to low volatility. So after you get periods of high, it would be reasonable to expect you go into some kind of a range before the next high volatility move. Just a thought, like just food for thought here.
Wednesday. Okay, there's a new day tomorrow. So let's see what's happening. I just want to see how price will play out here.
Okay, depending on how this day closes, which taking a look at the 4-hourly, you are now in bearish order flow because right now, if you fail to break above this high here, this bearish order block here, 100% you are going back to the range low and you should be positioning yourselves accordingly.
Oh wait, go out Thursday.
Only if it fails though.
It's still bearish. But of course, there is a 4-hourly period here and also a daily period here. So if it respects it and bounce back up, then it would be still continuing with our bullish thesis on the high time frame. So yeah, let's continue and see what's gonna happen. And plus, like price is consolidating as it.
Yeah, definitely ranging.
So I probably don't want to do anything now for now. Okay, still Thursday.
So that will give you an opportunity. So one of the ways that we trade ranges is that I think a lot of people get confused is that, oh, you never trade in the middle. Not necessarily. If you have swept out the high, we all already know that it's probably going to return back to the low. And so as long as you get confirmation, then starting from this point onwards, you could totally look for a short setup all the way back down to the low. Just that's just how you trade ranges.
During Friday. Very
so right there, just now, the 4-hourly chart, you had a sweep of high, which could potentially lead to a new low. We'll see though.
Very daily bias, yeah. So just want to see how price will play out. See Friday. We're entering Saturday, so I'll just skip.
Yep, this has just been a tough week. Not much volatility going on, which is fine. You get weeks like that. There is a saying that some days are not trading days, some weeks are not trading weeks. Heck, even some months are not trading months. It has happened. Heck, we have even had quarters, entire freaking quarters, where it's not tradable. Look at Bitcoin from, what is that? The March of 2024 until like September, October 2024. For basically entirety of 6 months, Bitcoin was just doing absolutely nothing. Like it went from 100K to like 80K or something. Not much.
To Monday, because we don't trade on a weekend. Okay, right here. Next. Okay, Monday. So overall, okay, wait. Now we can go to the weekly again.
Yep, good job.
Okay.
All right. So now weekly.
See,
when I see, wait, I'll let you go ahead first.
Weekly, bearish weekly one. Actually, Monday still like pretty bullish lah. But of course, weekly is starting to show signs of bearishness again. So daily bias also okay. This daily one, it didn't close below the
okay. So a couple of things that will add to that.
Okay.
So taking a look at the monthly right now, you actually had a monthly candle close bullish, which makes this a bullish order block, which means the profile for this month could be, if you tap into this order block, you can still have an expansion towards the upside before closing. That is a possibility. Okay, now let's take a look at the weekly.
Bullish lah, but cost weekly.
Okay, weekly, same thing here. You have a fair value gap right there. And so this week's profile, assuming that our monthly is also bullish, which I do think it's bullish until otherwise proven, then you tap into this fair value gap. Could happen this week, could happen next week, maybe the third week, and maybe the end of the month or whatever. But like That's how you sort of align the timeframes together, especially when you're looking at higher time frame.
Weekly starting to show signs of bearishness again. So daily bias also okay. Yeah, this daily one, it didn't close below below this daily low. So, and it's Monday, so let's not do a trade.
You don't need to close below the daily low as long as it's a bearish candle, as long as you have other reasons to believe that it is bearish. That is oftentimes enough. For example, as long as you have a bullish candle, in this case, then it could be enough for a next day to trade bullish. Same thing here, as long as you have a bearish candle. Sorry, let's use, here, bearish candle, although this is an inside bar, so nothing too much to do in that point. You would definitely be looking at that, right? That's an inside bar. I'll try not to confuse you though.
Not doing a trade for now. Just continue to see how price is going. Yeah.
Yep, that's a great mindset.
And plus it's like sideways. Okay, we enter Tuesday. Daily bias is bearish now. Yeah, it's actually bearish now. So weekly bearish, daily bearish.
Yep.
Weekly bearish, daily bearish. So
yep. Weekly bearish, daily bearish. Also, you swept out some highs.
This daily PDRA, fall PDRA.
So just add a quick side note, again, the PDRA would start from here because every point here has already been filled. So you draw from here to here. Okay, so right now you have swept out some highs. Right now you have a change in state of delivery, potentially. I can't really see it too clearly. You have a bearish kind of close here. So technically, enter here, stop there, target there. That would give you a 2R. Just an example of a trade that you can take.
Yeah, still here. Yeah, still here. Well, okay. So let's see how price will play out. It'll kind of hovering sideways, and we're entering Wednesday. Go to the daily and see.
Such a low volatility environment. It's really tough to play these environments. So like another thing to keep in mind is that if you start losing trades when you are in this chop period, it's fine as long as you are executing the system right. A lot of the times people, get demotivated or like they associate they could be a good trader. The system works. Just sometimes if you trade into, subpar market conditions, which in this case, there is absolutely zero volatility, you will have a higher chance where your trades lose. And that's fine. It's not a problem in the system. It's not your problem. It's a market condition problem. And so if your system starts underperforming in ranging conditions, it's pretty common, unless your system was specifically designed to trade ranges, in which case the system that we're learning is really good for trading trends, then yeah, you will struggle during ranges, and that's fine, right? You might not be, but I just want you to keep that in mind.
Daily is looking for signs of bullishness. I mean, bullish bias day. Yeah, bullish bias.
Right now, you also formed relatively equal highs here, so you would expect the high to get swept.
Yeah, I just realized there is actually a mini 4-hourly fair gap here.
Again, you do not consider that anymore, okay? Because it's already been filled.
Just realized it. Oh, wow. Okay. Oh my god. Okay, let's take this away first. Yeah. Okay, I just realized there's a very small 4-hourly period here, which...
Yep, that wouldn't be, it could be a support zone, but it's definitely not a fair gap. Technical definition of fair gap is already been filled. If you use this as a support zone, purely, totally valid.
Yeah, which price tapped into it a few times. So now price is bullish. Daily bias is bullish. Yeah. So let's see it happens again. Okay, we can see 4-hourly.
So yeah, right there, we anticipated those highs getting swept. Why? Because there are relatively equal highs formed.
This is here actually. Now I just want to see if price will tap back in again. Okay, it's trying to tap back in. Okay, wait. Oh, we are Friday already. Okay, it didn't close below.
So right now,
so
all of those highs have been swept. You have a bearish daily bias. You have relatively good lows down here. You know that you are in a range, potentially. If we're down to the 4-hourly, I already saw some fair gaps that you can trade.
Because it didn't close below this. But yeah,
so right there, you are in a bearish fair gap. Also, that is a change in state of delivery towards the downside.
See how price will play out first.
So technically, the moment you hit this fair gap right here, hop onto the 15-minute, see if you have a trade. Target, that low, that low, that low, that low, all of these are relatively equal lows, so they will get swept out. This is essentially a mini range within a larger range. So the larger range is here to here. Right now you have a mini range. You've just swept out a high, targeting your lows.
Yeah, we're entering Friday, yeah, daily. And there's something, but then it's also Newsday, so let's see if there's
Again, you do not need it to be a news day. Okay, and in this case, you probably wouldn't have found a setup on the 15-minute just because of how it played out. So, and that's fine as well. That's why we go into the lower time. That's why we have a lower time frame in the first place, to align the time frames and to ensure that we are trading into the right direction.
Volatility.
And right there, that is again the moment that candle closed right there. Boom, instantly down to the 15-minute, because that is your bearish order block confirmed. Again, remember earlier on, even from just the 4-hourly time frame, enter here, stop here, target here would have given you a 2R.
Okay, there is price tap back in here. Okay, I'll just jump straight into the 15-minute.
I hope you're trying to I hope you're able to see how the thought process that I'm using to not to say predict these moves, but what conditions I am looking to be met that I can use to read the market at a high clip.
To see that SSD going on. This is Friday. Oh wow, okay.
There you go. And remember, earlier on. Like this entire thing, we forecasted earlier.
Lucky that I avoided this. Or
The moment that range high got swept, and you started seeing those broken bases towards the downside, everything like this was all forecasted basically. I hope that you can start seeing the thought process here that I'm using to build like the step by step, building out the narrative. In this case, the move is not done yet, because you have a low there that can still be swept. Look, I wouldn't be surprised if you start again from high volatility. You might have a retrace coming back into this bearish order block right here, right? This series of green candles will be your bearish order block. Boom, boom. And even better, because if you start pumping from here, this low and this low will be relatively equal lows. Leaving behind relatively equal lows will eventually lead to them being a draw on liquidity.
But yeah, Friday. So this actually should consider as a bearish price, I think. Let's see if there's anything there. There is actually a...
And again, this is another one of those situations where if you get a really big red candle, if you're expecting the trend to continue, draw a high to low, look for the 0.5, look for it to be respected.
Happen and then...
Valid actually. But I must be missing something here, because I think you and Clarence have so far been using this, have been drawing your fair value gaps in this way. And I'm like, as far as I know, this is not the typical technical definition of a fair value gap, but somehow, some way, it's been kind of working. And I need to figure this out from you guys. What black magic are you guys using?
But not Friday, Tuesday. Yeah. Anyways, I'll just see how price will play up for now because of this sudden move. Okay, and then we can see the nearest fair value gap here. See if there's anything we can do.
Once it taps into it.
Okay, price cut back in.
Okay. Once it taps back into it.
It's Saturday and Sunday.
Saturday, Sunday. At this point, you can totally start looking for an entry.
Let's try and see if I can.
Perhaps better to let Monday play out.
So 35 minutes already, I think. Yeah, I'll just try to see if I can find the trade. Otherwise, yeah, I'll just submit this and then see where I did wrong and yeah, where I can improve so that probably I could take trades there, here and there, or yeah. Okay.
Right there.
Back to the monthly. Okay. Previous month still, yeah, bullish. But of course, here we can see bearishness in the weekly. Previous weekly low, previous weekly high, daily.
Yep. Something I would have loved to see you mention there is that weekly last week's candle closed bearish means the draw liquidity for this week is going to be the previous weekly low.
Oh, nice. There's a clear fair value gap here. Yeah, price tap.
Which again, the fair value gap is like from here, you draw it to the right, not to the left. Like just to give you an example, when price was here at this point, this fair value gap did not exist yet. So like you're kind of associating what's happening in the future and trying to associate meaning to something that happened in the past. I don't know if you know what I mean.
Indicates strong one, I guess. So now price tap back in again also, and there is a bearish flow here already.
At the moment, Monday closed bearish. Tuesday you can totally start looking for short trades already.
Yeah, bearish flow, and then what previously is bullish. Bullish bias though. But for now, big time frame is bearish. So my big time frame thesis is bearish. So I would.
It's bullish bias, sure, but you have a bearish PDA rate in overall. Like the drawn liquidity here is pretty clear. So yeah, you might. I would lean bearish.
You want to look for shorts. So let's see. And then false folly. I'll take this. That's my.
So in this case,
4 hourly area.
What I would do is the fact that, okay, first of all, you had a fair value gap from this top of that candle to the bottom of that candle. That is your fair value gap. I filled it once during the weekend, but because it's the weekend, we sort of like disregard it. But again, you swept out the high and you formed it again, right? So this is now your strong high. Although now you're leaving relatively equal highs here. So if you get a sweep that time, then yeah, that might be the setup. In this case, I would draw the fair value gap from the top here to the top here, because everything else from back then is already filled.
Okay, let's see. Yeah, we're on Monday. Okay. Oh, okay. So Monday's.
And right there, like again, kind of. So the moment it filled here, the moment you get that fill, given that it's a Sunday, that's fine. But Monday, the moment Monday closed bearish, Tuesday immediately, right? You just go in and start looking for shorts because, well, in this case, the bias was clear. The drawn liquidity was clear to me. You might not see it yet, probably due to how new you are to this, but you're already doing a fantastic job. Just sharing the thought process so that you can see how you can do this better next time.
Bearish, Tuesday should be bearish. I think I could have taken a trade somewhere here after Sunday. Yeah, Monday here, tap back in. Yeah, again, I think I missed it again. Okay, let me just get out and go.
So in this case, that would be bearish order block. Monday, you tap back into it and boom. But it's no worries. You're doing well so far. I love that you are going on to the weekly, going on to the monthly, going on to the daily. I love that you're having that habit. I love that you're checking the 4 hourly constantly. Just a couple of technical definitions that you need to get right.
Go and check with, oops. Okay, now let's go back to the daily first. Yeah, daily, yeah, here. 4 hourly, Saturday, Sunday, yeah, Monday starts here, yeah, Monday starts here. So after that, price tap back in. And then I probably could have taken this trade here. After here, okay, so we can see SSD. Yeah, we see SSD here. Once SSD formed, yeah, could have taken a trade somewhere here.
Yep.
Targeting the previous
Good stuff.
high here, then targeting to R. Yep. But yeah, I missed it.
Further, by the way, because you identified that, hey, daily bias is still bearish, and so you're continuing to trade lower. It could have been more than 2 hour, but of course, like the system indicates 2 hour.
And also probably I think I wouldn't take it straight, I don't know, because the daily here is the previous day is, oh wait, no, sorry, yeah, it's Monday, yeah, and the first day, okay, no, yeah, it's bearish, so this one I could have taken this straight, but yeah, maybe I skip too fast on it. Okay,
No, it's not a you skip too fast or whatever. It's just I don't think you were aware that all of this was happening. Which again, given how new you are to this, it will come with experience, and it will come after putting in a few more reps. I'm glad I'm like reviewing this backtest so that hopefully you can also see like the thought process here. Okay.
I think I'll just submit this, and yeah, I didn't take the, I think I missed like a few trades, but yeah, I'll just submit this, and then yeah, hope to listen to your feedback, and yeah, and just
Yeah, overall, you're doing good, man. So a few things to fix. One is the technical definitions of your fair value gaps. Two, I think you're very fixated on fair value gaps and you're not really paying attention to order blocks. Three, I think you're kind of losing, like you're getting, it's not a bad thing, by the way. It's, again, you're just new to this, but you are very focused on the small picture, losing sight of the fact that, hey, you have a range. You go onto the monthly and the weekly, but it doesn't seem like you are utilizing them to the highest ability because, for example, the monthly order block right there that I identified, the weekly chart and stuff like that, like the way that you can improve on that is once you go onto those monthly and weekly charts, look for those PD arrays and then formulate a power of 3 plan, which is, okay, the fact that you are in a monthly bullish order block right here means that potentially the start of the month is going to go into the bullish order block. And then if you are still bullish, you're going to go up and then you're going to close. So knowing that monthly profile, you can go onto the weekly and maybe you anticipate, okay, the moment you saw that last week's weekly candle close bearish, you can be like, okay, so chances are that retracement's going to, like that tap into the fair value gap is probably going to happen during the first week. And then maybe the second week I can look for a long trade, but chances aren't, because if you tap into the fair value gap, if you tap into the monthly order block here, this week's probably going to close bearish. And so you're probably going to need one more week, right? It's not going to be until week 3 where you can get confirmation that, hey, you can long. Otherwise, you're going to be shorting until proven otherwise. That's just an example of how just utilize those higher time frames to their full potential. Because yes, I love that you're going onto the higher time frame, but you're not utilizing them for what you're not utilizing the purpose that they were intended for. And another thing is, no, yeah, like overall you're doing well. None of these issues are like super glaring. It's more of like just minor things as well as probably a lack of experience from what I can see. And all of this is fixable. Good job understanding the module so far. And right now, the strength that you definitely want to work on is big picture, like keeping sight of the big picture and letting it dictate. And almost like the way that I would equate this is like one of the things I think I do well is I'm able to think several moves ahead based on the information that I have at the moment. Like, for example, you saw it happen multiple times where based on the information I have, I'm able to see think ahead a few moves. And the way that I do that is like scenarios, right? Like what's the something that you should definitely try to do. Again, this will come with experience, not something you will pick up on immediately, but just showing you that this is the potential level that you can reach. And by the way, the fact that you are this close right now to this low right here means that that low, like this level, is definitely going to get swept. So yeah, again, just thinking ahead further. All right. Hope this helps. If you have any questions at all, feel free to ask. I will be happy to help. Keep up the good work. I hope to see more from you. Cheers.